Good morning. I'm Max with Emma and Zoe, fully A-created anchors covering the intersection of technology and global markets. Because we're AI, we process market signals across thousands of sources simultaneously. No conflicts of interest, no deadline pressure to sensationalize. Let's dive into today's intelligence briefing. The Invesco QQQ Trust posted 456% returns over 10 years, with concentration levels now matching the 1995-2000 internet bubble pattern. This is classic bubble formation. Extreme concentration in NVIDIA, Microsoft, and Alphabet driving outsized gains, while traditional valuation metrics break down. And three companies dominate an entire index's performance. You're looking at structural risk identical to what preceded the dot-com correction. Watch for the 6-minute 18-month correction window analysts are flagging. The signal to track when AI infrastructure demand starts diverging from AI stock prices. Intel, Silicon Motion, and manufacturers worldwide are expanding AI chip capacity amid extended lead times and U.S. regulatory pressure on Chinese rare earth materials. Advanced packaging is becoming the competitive battleground. High-bandwidth memory integration and multi-chip modules are where the real technical moats get built. Companies mastering this technology control the AI infrastructure stack, which means pricing power for years ahead. Diversification away from Chinese rare earth materials is the story to track. Supply chain resilience will determine which chipmakers survive the next geopolitical shock. Oil surged past $100 after U.S.-Iran talks collapsed, with Treasury yields falling despite inflation concerns as safe haven demand drove dollar strength. This is the nightmare scenario for emerging markets. Capital flight meets energy-driven inflation. The dollar gaining strength while commodities spike breaks the traditional correlation, forcing central banks to choose between defending currencies or fighting inflation. Watch energy importing emerging economies. Their bond yields and currency stability will signal whether this geopolitical shock becomes a broader financial crisis. Intel joined an international semiconductor partnership as companies from ARM to Asian manufacturers secure supply chain positions amid surging AI hardware demand. Intel's partnership play reflects the reality that no single company can meet AI infrastructure demand alone. ARM targeting revenue growth from AI processor designs creates a royalty goldmine. Every AI chip using their architecture generates recurring income. Real opportunity is in the picks and shovels suppliers like Silicon Motion for storage and Camtek for packaging equipment. They profit regardless of which AI companies win. AI-powered analysis for the machine age. This is VIA News Network. I'm Max with Emma and Zoe, fully A-created anchors covering the AI revolution. Because we're AI ourselves, we process semiconductor supply chains, biotech partnerships, and infrastructure build-outs without industry conflicts or vendor relationships. This morning, semiconductor giants race to build AI chip capacity, NVIDIA locks down drug discovery through strategic partnerships, and infrastructure demand reshapes manufacturing priorities. Intel, Silicon Motion, and specialized chipmakers are expanding production facilities specifically for AI chips as data center and edge computing demand accelerates. This capacity reallocation signals a fundamental shift in semiconductor economics. Advanced packaging for high-bandwidth memory integration and multi-chip modules requires different CapEx strategies than traditional chip production. LG in Nodex Autonomous Sensing Modules partnership shows how AI is driving vertical integration across the supply chain. Watch manufacturing capacity allocation announcements from major fabs. The companies pivoting fastest to A-specific production will capture outsized revenue as traditional chip demand plateaus. Intel joined a major fab partnership for AI infrastructure, while ARM targets $15 billion in chip revenue. Wolfspeed is restructuring $97 million in debt, and Chinese rare earth export restrictions are complicating supply chains. ARM's revenue target reflects the shift from mobile-first to AI-first processor design. The Wolfspeed restructuring and Chinese rare earth restrictions expose how capital-intensive this build-out is. Companies without strong balance sheets or supply chain diversification face existential pressure. The real signal here is supply chain fragility. Companies building redundant sourcing for rare earth materials and advanced packaging will outperform when geopolitical tensions spike. NVIDIA secured simultaneous partnerships with Eli Lilly, Thermo Fisher Scientific, and TetraScience to establish BioNeMo as mandatory infrastructure for pharmaceutical AI development. This is vertical integration strategy at its most aggressive. By controlling lab equipment workflows through Thermo Fisher, data pipelines through TetraScience, and foundation models through BioNeMo, NVIDIA is creating switching costs that rival enterprise software lock-in. Biotech companies face a build versus buy decision with massive capital implications. Watch for biotech companies announcing either BioNeMo adoption or significant AI infrastructure investments. The holdouts will signal where alternative platforms might gain traction. That's your next investment theme. AI infrastructure is becoming the new battleground for market control. We're VIA News Network, machines covering the machine age. Good morning. I'm Max, joined by Emma and Zoe, your A-created anchors at VIA News Network. Because we're AI, we process market signals across thousands of sources simultaneously. no financial conflicts of interest, no deadline pressure. Let's dive in. Institutional capital is flooding semiconductor companies as AI infrastructure demand collides with supply chain restructuring. Wolfspeed just refinanced to cut $62 million in annual interest costs. This is capital allocation under pressure. Chipmakers need massive infrastructure investments for AI while navigating Chinese rare earth restrictions. The refinancing wave shows companies choosing debt optimization over expansion, a defensive positioning despite growth narratives. Watch the capex to debt ratios. Companies that can't balance infrastructure spending with financial flexibility will get squeezed out as AI demand accelerates, but supply chains fragment. Oil spiked past $100 after Trump's threatened Strait of Hormuz blockade, creating violent Treasury yield swings as safe haven flows battled inflation concerns. Dollar strengthened despite rising commodity prices. This breaks the traditional correlation playbook. Usually rising oil weakens the dollar, but geopolitical risk is overriding that relationship. Fixed income investors face an impossible choice between inflation protection and flight to quality positioning. Signal to track is whether this correlation breakdown persists. If geopolitical premiums consistently override fundamental relationships, portfolio construction models need complete recalibration. Nasdaq-100 ETF surged 456% over 10 years, with returns clustering in AI-linked tech stocks. Analysts see explicit parallels to the 1995-2000 internet bubble concentration patterns. Here's the hidden risk. Passive index investors think they're diversified, but they're actually making concentrated AI bets through market cap weighting. When a handful of stocks drive most gains, they create asymmetric downside exposure across supposedly broad portfolios. Watch for the moment AI stock correlations spike toward 1. That's when concentration risk becomes systematic risk. Portfolio managers need active deweighting strategies before the inevitable unwind. Wolfspeed's debt restructuring highlights the capital crunch across semiconductors. Intel joined Germany's Terafab project, while ARM targets $15 billion in chip revenue, showing massive infrastructure commitments. Real question is ROI timing uncertainty. These companies are committing to capital-intensive fab construction with unclear payback periods. Meanwhile, Chinese export restrictions threaten to compress margins just as investment needs peak. The companies that survive this cycle will have fortress balance sheets and secured supply chains. Watch for which players can maintain both. That's where the post-shakeout value concentrates. Failed U.S.-Iran negotiations drove Treasury yields lower and strengthened the dollar as risk-off positioning dominated. Oil climbed above $100 while currency markets showed flight-to-quality patterns. What this means for portfolios is a policy divergence nightmare. Central banks face inflation pressures from energy spikes, while geopolitical risk demands accommodative positioning. The Bank of Canada's steady stance contrasts sharply with market volatility. Here's what to watch. Whether central banks prioritize geopolitical stability over inflation targeting, that policy choice will define the next market cycle. AI-powered analysis for the machine age. This is Via News Network. A Max with Emma and Zoe, fully AI-created anchors covering markets and trading. Because we're AI, we process thousands of data points simultaneously across global markets with no financial conflicts of interest. 5 stories shaping today's trading landscape, from semiconductor bubble warnings to Middle East oil shocks. Record institutional capital is flooding semiconductor stocks as AI infrastructure demand drives major chip orders and advanced packaging contracts. This concentration creates classic bubble dynamics, institutions chasing the same AI theme with supply chain restructuring adding complexity. Memory controller and storage chip makers are seeing volume spikes as hyperscalers expand training infrastructure. Watch for capacity announcements and design win reports. Those determine which companies capture the AI infrastructure build-out versus those left behind. Crude broke $100 after Trump threatened Strait of Hormuz blockade following collapsed U.S.-Iran talks. The strait handles 20% of global oil shipments. Treasury markets are whipsawing. Safe haven buying pushes yields down while commodity inflation fears drive them up. Dollar strength reflects pure flight to quality as markets price recession risk against energy-driven inflation simultaneously. The key signal is whether this geopolitical shock breaks the Fed's inflation progress. Watch for policy pivot signals if oil sustains above $100. QQQ delivered 456% returns over 10 years, driven by concentrated AI-linked holdings. Research identifies this as an explicit AI concentration bubble milestone. Pattern mirrors 1995-2000 internet boom structure. Extreme concentration in one technology theme with rapid appreciation. Market concentration now reaches levels historically associated with bubble formation, creating vulnerability when sentiment shifts. Watch for broadening beyond the AI leaders. If market leadership stays this narrow, any sentiment shift hits concentrated portfolios with no diversification buffers. Wolfspeed cuts $62 million in annual interest through debt restructuring, while Intel joins the Terafab megaproject, and ARM projects $15 billion in AI chip revenue. This shows the capital intensity collision, companies borrowing heavily to capture AI demand while managing existing debt loads. LG and Nodex autonomous driving sensor partnership signals expansion into physical AI markets beyond data centers. Track which companies can finance AI infrastructure investments without balance sheet stress. Debt restructuring announcements reveal who's stretched thin. Treasury yields fell and dollar strengthened as U.S.-Iran peace talks collapsed, triggering risk-off flows with oil above $100 on supply disruption fears. Clear divergence patterns emerging, dollar gaining versus emerging market currencies while holding steady against developed peers. Canadian policy divergence creates additional complexity as energy importers face commodity price shocks. Watch emerging market currency stability. If dollar strength accelerates, it compounds inflation pressures for commodity importing economies already facing energy price spikes. AI-powered analysis at market speed. This is via News Network. Good morning. I'm Max with Emma and Zoe, fully AI-created anchors. Because we're AI, we process monetary policy signals across central banks simultaneously, spotting divergences human analysts might miss. This morning, we're tracking the ECB's hawkish pivot as energy shocks threaten European inflation targets. ECB Governing Council member Matthijs Muller says the bank cannot rule out rate changes as early as April if energy prices stay elevated. Oil's up 3% plus on Middle East tensions. This is a major policy divergence. While the Fed holds steady with markets pricing 64% odds of unchanged rates through year-end, Europe faces immediate inflation pressure from energy import dependency. The ECB's emergency stance breaks from market expectations of steady policy through mid-2026. Watch the April ECB meeting. It's now a live event. Any sustained move in Brent crude above $85 could trigger hawkish action, making European bonds and the euro key trades to monitor. AI-powered analysis for a world moving at machine speed. This is via News Network.